What if I told you a $100 investment today could potentially turn into $1,000 in the future? What if I told you most people will miss this opportunity completely? And what if I told you the stock behind this is trading under $5 right now? Because what you're about to hear could completely change the way you look at investing. And here's the crazy part. This company is not some random small startup. It is already dominating a massive region. Yet its stock price still looks cheap. In this video, I'm going to break down everything. We will cover the business model and growth potential. We will also talk about risks and hidden opportunities. And by the end, you'll know if this stock is worth it. But I won't reveal the name just yet. Because first, you need to understand the opportunity. And trust me, this is where things get interesting. So make sure you watch till the end. Let's start with the bigger picture. This company operates in Southeast Asia. It includes countries like Indonesia, Vietnam, Thailand, and Malaysia. Together, this region has over 600 million people. Now think about this for a second. A huge part of this population is still going digital. Millions of people are coming online every year, and that creates massive business opportunities. More people are using smartphones daily. Internet access is getting cheaper and faster. Online services are becoming a necessity. And digital payments are exploding in growth. This means one simple thing. The market is still early. And early markets create the biggest winners. That's how multi-bagger stocks are born. Now let's talk about the business model. This company is not focused on one service. Instead, it is building something much bigger. Something that keeps users inside its ecosystem. It is creating what is known as a super app. A single app that offers multiple services. Everything is connected in one place. And that is extremely powerful. Imagine opening one app and being able to do everything. No switching between apps. No friction at all. Users can book rides instantly. They can order food anytime they want. They can send money within seconds. They can even pay bills easily. Now here's why this matters. The more services a user uses, the harder it becomes for them to leave, and that creates long-term retention. Retention is everything in tech. Because returning users generate more revenue. And higher revenue leads to higher valuations. This is what smart investors look for. Now let's talk about financials. For years, this company was in loss, which is normal for fast-growing tech companies. Growth usually comes before profit. But recently, something changed. The company started controlling its costs. It improved its operations and slowly moved toward profitability. This is a major turning point because the market rewards profitable growth. Stocks often explode at this stage, when losses turn into profits. And this is exactly what is happening here. The company is entering a new phase, a phase where growth meets profitability. And that's where big moves happen, so why are investors interested? Because this setup is very rare. You have growth, scale, and improving profits, all happening at the same time. Now think about this scenario. A company dominates a huge market. It keeps users locked in its ecosystem. And it starts making real money. That is the perfect combination. And when the market realizes this, the stock usually doesn't stay cheap. It starts moving fast. But before we reveal the name, let's talk about the risks as well, because no investment is perfect. And ignoring risks is dangerous. Competition in this space is intense. There are other companies fighting for the same users. Market share can shift quickly, and that creates uncertainty. Profitability is still developing. If the company fails to sustain profits, the stock can drop again, and investors can lose confidence. Another risk is volatility. Stocks under $5 move aggressively. They can go up very fast, but they can also crash quickly, so this is not a safe play. This is a calculated risk. High risk can bring high reward, but only if you understand it properly. Now, after everything we discussed, the market, the model, the growth, and the risks, it's finally time to reveal the stock and connect all the dots together. The company we are talking about is Grab Holdings. Its ticker symbol is GRAB. This is the stock behind everything you just learned. And now it should make complete sense. Grab is trading under $5, which makes it look like a small stock. But in reality, it is a major tech platform. Especially in Southeast Asia, the stock was much higher before. But it dropped due to market conditions. Now it is slowly stabilizing again, and that is where opportunity builds. Grab is expanding its ecosystem. It is adding more financial services. It is improving delivery operations. and using AI to increase efficiency. The more services it adds, the stronger its ecosystem becomes. Users spend more time inside the app, and revenue per user increases. This is how long-term growth is built. Not in one big move, but through consistent expansion and smart execution over time. Now let's talk about the final verdict. In the short term, expect volatility. Price movements will not be smooth. There will be ups and downs, but in the long term, if the company continues to grow and maintains profitability, this stock has strong upside potential. It could become a multi-bagger. But patience will be required, and discipline is very important, because hype alone won't make money. So this is not financial advice. Always do your own research. Never invest blindly. And only invest what you can afford to lose. That is the golden rule of investing. That's the complete breakdown of this stock. If you found this helpful, like the video. Subscribe for more stock analysis. And tell me what you want next.